All right, how do we trade support and resistance? So I want to go over what we do is it's sort of like football, basketball, where you run plays. And that's what we do is we find plays that are successful. We run those plays over and over and over again. And so we're going to go through, for this last segment, we're going to go through a few plays that we do. And I'm going to see how far we get because I don't want to rush through this because this is really the plays that we run is really how we make money throughout it. Now, I'm going to start with basic plays, and then the plays will get more advanced. And when you are on our morning calls, what you'll hear us call are we're hunting in the market for these plays. And if we see these plays, then we play them. We run the play. So this first play we call the bounce. And that's just a simple play. It's just bouncing off of support and resistance. And so down here, what you'll see is price action is pushing up, and then it turns and starts pushing down. And what it's leaving behind when we look left is support and resistance areas. And so we trade the bounce on those support. When it comes to a level of support and pushes and bounces off of that support, we can enter an order off of the bounce because it clearly rejected support and it headed in the opposite direction. So you can see support happen on uptrends. You can see it come down here, and this rejects or support holds up, which was old resistance. That holds up and it pushes up from there. So we can enter an order here, and then we can enter what we call a stop loss, which means that if price comes past the lower high, then we can stop the order, or we can take ourselves out of an order and control the amounts of loss. And we set that below the peak because we believe that it's going higher, so it shouldn't come lower than this peak. So we'll put a stop loss there and enter an order on support. So price comes down, it bounces, we enter an order, and price runs up. And we catch all of that pip movement. And then we can do the same thing on resistance on a trend line. So this is horizontal support where it's old resistance turn support or old support turn resistance. So we can do that there, but we can also do it on a trend line, a bounce off a trend line. When we see multiple bounces off of a trend line, then the next time it comes to that trend line, we can predict that it's going to bounce off and take that. And so we trade the bounce off the trend line, where we enter the order off the trend line and put our stop loss just above that peak, above or below, depending on where the trend line is. So this play is called the bounce, where we're just bouncing off a structure in the opposite direction. All right, so that's a pretty easy one to understand, where we're just identifying support and resistance and taking the bounce off of support and off of resistance. All right, so we can see that being done in the market several times. Before we were the break, we were marking out support and resistance. And so if we go down, say I'm a scalper, and let's say I'm on the higher time frames. So, the higher time frames are stronger, and we'll talk about that. The lower time frames are weaker as far as supporting price. But let's just say we marked out this area of support here. And we break, and now we're getting resistance. And let's say price is coming up here, we're getting multiple rejections. We can trade these bounces off of resistance, support turn resistance. Even when we look on a lower time frame, these are, it comes up, hits resistance, we can trade it down. So these are just bounces off of resistance that we can trade. All right, we can do the same thing with support once we identify where support is. So let's just say we find support here where we have multiple rejections that are occurring. Here, so looking left, we can see multiple times where there's more of a range where it comes down and rejects off of here. These bounces we can trade. So it comes down, hits that, it bounces off of that, we can trade that. Then it breaks through a little bit. That was probably more so news related, but we can trade these bounces, right? So right now it's coming back to this area of support, and we just wait to see if this is going to hold. If it holds, where do you think it's going to go? It's going to go back up to the range. So we can bounce it off of there and go to there. If it breaks, then it's probably coming lower. So we got to find a new area. That's a way to trade support and resistance. Now, what about trend? If it's trending, let's go to a smaller time frame so we can see a trend. So let's look at this trend here off of this downtrend. Excuse me. Let me switch. I'm not marking up a lot of stuff on the chart. All right, let's just say this trend here. That's happening. It's not a perfect trend, but it's a trend nonetheless. So this is the low. It went to a high, created a higher high, higher low, higher high, higher low. Now it's going to it tried to create a higher high, but now it's just bouncing off the trend line. All right, so we could catch this bounce off the trend line. It bounced off the trend line and came up, then it came back down. We catch the bounce back up off the trend line. Now it's back on the trend line, and we can see if this area holds, it's going to bounce and eventually create a higher high. If it breaks, then it'll come back down lower. Right? So those are just bounce plays. Nothing too complicated about it. You don't have to overcomplicate these type of plays. They're just bounces, and you'll see these type of bounces in the market quite a bit. Right, this is a good one that we traded off of what we called this high here off of. We'll learn about MAs, but it was off of 800 MA. And it's been selling off ever since. And so we've been trading EU, this trend ever since. And it's just the bounces off the trend line. And we're trading that all the way down. So every time it hits that trend line, it comes down. Then it hits the trend line again, comes down. Now it's at the trend line again, and we're waiting for the bounce for it to come down. So happens that, and we'll talk about this, but you can add the two. So you have horizontal support here, where it was support. You drag that over, it's support there, that now could potentially be resistance at this level. So you had support, then it broke support. Now that can be resistance at a trend line where it can bounce off of that and come down. So that's how you trade the bounce. All right, another play that we use, which is we like better than the bounce, is the break and retest. So the break and retest is when you break support or you break resistance to the upside, but you break support and then you come back and retest it and stay below it. So now support turns resistance and you enter an order and take that to the downside. The reason why we like this is because it is a more confident play because it involves a test. With the bounce, if it's just a bounce, there's nothing to say that it won't come back and go in that direction against you. There's no test. But with the test, you can see that area of support is going to hold. And so we have old resistance here where we came down, and then we broke that. That's the break. We broke the old resistance, and now we come back and retest it. And we stay above it, and that resistance turns support. And that's the retest that we can enter in on with confidence and take that to the upside. If it's going down, it creates that lower high, that support comes up, and then it breaks that old support, and that old support now becomes resistance. So when it becomes resistance, that's the retest of the old support, looking left, and we could take that to the downside. So we like that better because we can put a stop loss just above that. And if it comes down and then goes up against us, we're not losing too much, but we're pretty confident that it's going to go in our direction because it's proven that it's going to go in that direction. All right, and so that's what we're seeing on that previous example. What were we looking at? We were looking at AUD, NZD, I think.
Tim, may I ask a question?
Yes.
When you're doing the the break and retest, and what is your kind of like go-to sign that because of course we get fake outs where we think it's just going to retest. What is your go-to sign to know that it's a true retest, like that it is going to just hit the level and then continue on the way it should be going?
Yeah, there's several signs of that, and some are more complex than others. For the easiest point is multiple touches.
Okay.
Is the point. And so when I go back to, you'll see this on Euro AUD. On the let me go to the hour and look at it past on this move down. So without complicating things too much, this was, when we look at this was old support here. So price came down, supported, and then it rejected off of that. That's support. But this leg, it broke through. So that's the break right here. So it breaks, and then it retested. Now, if you look at this, depending on what time frame, but it retested multiple times. So, Kamika, if you enter the sale off of the first one, the first test, it's possible that it can come back and go against you. But when we see it do it multiple times, where it's tried multiple times to get past and hasn't, that's where we build the confidence that that this area of support term resistance is going to hold.
Okay. Thank you.
And that's when we can be more confident to take it down. And then it comes back up, it goes down, creates the low, then it comes back up to retest this area again. And again, the market says, we don't want the price to be above 1.665. And it rejects multiple times. So you got to believe it at some point. And so now you believe it and it sells off.
Okay.
All right. And so that's the way that you can trade that break and retest. But these happen in the market over and over again. So this is a good example of this break and then the retest, and then it goes lower. Currently, what it's doing now, if you look at on a lower time frame, you're going to have moves within moves. So on the 8 hour and 9 hour on the day, we see this. But if we go down to the hour, it's another move where you see that this is a clear support area right here. And this is a clear resistance area. What is this? So it was support before. Support goes higher, then it breaks the support. It tries to support it here, and then it breaks it. And then what does it do? It retests it immediately. Multiple times. We can enter in off of that break, and then here's the retest, and then take it to the downside. Then it comes back up and retests it again, and it still is holding as resistance. We can enter in here and take it to the downside. So those are great. Break and retest is a great setup for us to, we run this play when we see it, and we hunt for this play a lot on our morning calls because it is a trusted play for us. Now let's look at this another example of something that we want to stay away from, even though it is a play, and that's the breakout. And so the breakout is when price is forcefully going in a direction. So let's say we're right here, and we see that price, we catch price right here in this area. It just broke recent support or resistance, just broke, and it's headed up. We don't really want to trade that. We could trade the breakout, but we really don't want to trade that because it's less trustworthy. It can work out where we can put the stop loss below it, but in the middle of the move, it's not as trustworthy. And so it could come back, but because it's not at a peak, we don't really like that. And so we are patient enough to wait for price to get to a peak before we start trading it. And so usually what you'll see on our morning calls is that we see price moving. We know the direction that price is moving, but we won't call it because we can't control the move. And we sort of use terminology like getting under a falling knife. Once the price is moving, or getting in front of a moving train, it's like we don't want to jump in. If we want to get on the train, let's just wait for the train to stop and then get on, and then we can ride it. But in the middle of the move, it's going to be dangerous for us. And so I'm going to go back to the example is where price is right now, is that it just rejected off of this level here, produced a lower low, and now has produced, and let me get rid of all the noise just so you can see just raw price action. So this is the high. It produced a low, which is greater than this low. So it's a lower low. Now it produced a lower high. So we have a lower low and a lower high, which says that it's a downtrend. So it's more than likely should be producing a lower low down here, where this should be a target somewhere in here, where it comes down, hits a low, pulls back, retests this level, and then goes lower, and then retests this level, and then goes lower. That's what should happen. But it's in the middle of this move, and we don't know if this is going to hold as support. So we say, well, it has a lower low and a lower high. Why don't we just enter in right now, because we know it's coming down here? Well, you don't know if this area is going to break and come up higher, and then retest this and keep coming up higher. And there's nothing confident to say that this move is over because it's in the middle of the move. So the best thing to do is to let this move play out. Let the low be created, and then let the retracement happen and the retest happen at that level, and enter in here. then that way you can be confident that now you can take it to the downside. All right. So I'm using Euro AUD as an example because I'm actually trading this one on the higher time frames. What you can see is on the weekly, you see the low here, and what's happened? It's the low, it puts in a high, then it puts in a low, then it puts in a high, then it puts in a low, then it puts in a high. Now we're in the middle of the move, right? But if you look at this move, what has happened is that it pushed up, and this was a peak. What did it do at that peak? It broke that peak, and then it retested that peak. And then it went and pushed up into a higher high. Right. And so that is what we're saying is letting this play out is okay, boom, it went to the high, went to the low. Now it created a high, and now what should happen? Well, what should have happened is this last peak should have been tested. Let's put it as a range because there's some exhaustion. I'm on a weekly candle. Let's make a wider range. So this last peak got broke, and then it got retested. So if I would have just if I would have just said, "Oh, let me just take it right here and go to a high," no, let price do what it's going to do. It broke it, and when it broke it, what can happen now? Well, it can now use old support now can become resistance. So now that it's broken it, it can now come up and use that as resistance to come down. Right. And so that's the way that we can predict price action just based on support and resistance alone. All right. So now I'm going to show you just a quick way that I want you to, for homework today, I want you to go to Trading View, and I want you to mark out support and resistance. And so initially I was taught to do it on a bar chart, and you can do this on a line graph. You can do this where you find old resistance and support. So you can do that here, but just go through the chart and take your time, grab the rectangle, or you can grab the horizontal line tool. And all you're going to do is, and I don't do that now, I do it more on a bar chart, but come to a daily time frame, and all you're going to do is just drop a horizontal line on the chart. Drop it anywhere on the chart. And then you're going, wherever price action is, you're going to drag that to a point where you see clear rejections. So I see rejections here. So this is clear level of support. Now it's far away from price action, so I really don't care about that. But just for this exercise, just do that. Then grab another one, drop it on the chart, and do the same thing. Grab it and just find levels. So here we got clear resistance, and then we have clear support. So that's a support and resistance level. And you can right-click it and clone it. That's another way to do it, or you can just grab it. And then just keep doing that until you find where support and resistance is. Here's resistance, here's support. And that's going to be your homework for today. So now, usually what I'll do is, because I don't like to have a lot of stuff on my chart, is I'll do it near price action. So price action is right here currently. So I want to find price support where it's at right now. So right here, it's stuck on a level that is clears rejections, support here, rejection. We have some spikes above it, but for the most part, it's having trouble closing above there. And then it's support over here. So now it's acting as support. All right. And then you got a level here where you have support. Then you have rejections. All right. So that's all I want you to do on the chart is just to find levels of support and levels of rejection on the chart. Because what this will help you do is it will help you create a playing field for trading support and resistance. So you have resistance right here, then it turns support, support. And so now you have ranges of where price is going to go. Okay, so now let's look at this on any time frame. So we did that on the day. Let's go down to the 4 hour. So the 4 hour zooms in on current price action, and we can see our major zones. All right, and then you can adjust it as you need to, where you want to adjust it to, of where price could go. And
Tom, I have a quick question.
Yeah.
Do you typically always start at the daily and then move down for time frames when drawing support and resistance?
Yeah, it's usually called a top to bottom analysis or a top down analysis. And I'll even start on a monthly level. If the monthly isn't clear, then I'll go down to the weekly and find some major levels. Like this is a major level that it's on right now, where we got resistance. And then I'll just work myself down. Then I start on the day. And then from the day, once I have the day marked out, then I'll jump down to the 4 hour. And that's usually all I'll do, because then if I do it more, if I go down to the hour, it'll start to get noisy. If I start marking out lines here, it'll start to get too noisy. And so what will happen is price is right here, right now. If this acts as support, it's going to head to the next level of resistance. So it's going to go from here to there. If it breaks this level, then it's going to retest it, and it's going to come down to the next level. And there is a level here, but it hasn't been, it's a minor level because it hasn't been tested a lot. If I look left, this level really hasn't been tested a lot. It's been tested a couple times here, but it's not really a significant level. This is a more significant level that has multiple touches at this level. And so price is right here. It's going to go either to here or it's going to go to here. And that's what I'm able to trade. Now, that's one step. Now I decide where I say price can move. It can move up, down, or sideways. Right now, what is price doing? Is it moving up, down, or sideways?
Sideways.
Sideways. Because it's a range. It's just trading within a range. It's really not a high or a low. It's just trading in a range. So really the only play here is to off support, a bounce off support to the top of the range, then a bounce off the top of the range to the bottom of support until it breaks out and retests, or breaks to the upside and retests and starts to trend again. All right. Now, if I go down to, if I'm a scalper, if I go down to like a 15-minute chart, I may see a range. Like I see a range on the 15-minute where it's creating that higher lows and highs. I can see that on the lower time frames, but the lower time frames aren't as trustworthy as the higher time frames. All right, so this concept you'll get used to, but that is the concept. If I was in let me find a trend. let's say I was in this trend. Let's say there's a replay button here. So I'm going to use the replay button. And I'm going to go back. It's a great way to test these things out. Let's say I was here and I was looking at price. The first thing that we see is price is not creating a high. It's having a hard time closing above this level. So you see the body of the candles, even though it pushes up, the bodies close below this level, which is showing us that it can't close above it. So we're in an uptrend. We see the uptrend where it's higher high, higher low, higher high, higher low, higher high, higher low. Let me mark this out just for clarity of what's going on. So we're seeing this trend go right now. And so now we've come down and now we're going into consolidation where we can't close right there above that. So this, we could have traded here at this level and then it pushed up to this level. And then it came down, created a low. We could have traded that and then it pushed up to a level, created a high, and then we could have traded. So there's plenty of opportunity for trades here. But now we've gotten to a point where it's in consolidation. And so if it can't close here, then we'll wait for what the trend is going to do. So this is the trend right here. Really, there's a few places that we could draw this trend line. It's really not the best example, but let me get rid of the noise. So 2 points make a trend, 3 is confirming. So I have 3 here. So it's 1, 2, then it comes back down 3. So we have a trend going where we're getting consecutively higher. And so now what we're waiting for is the break and retest. Is that now since we're moving sideways, we need to break out of this trend, come retest it, and now if it stays below, we can start trending down that way. And so if you look at what price does, it doesn't, as it plays out, starts to break that trend, and then it starts to trend down. So that was the first level of support right there, which was really this level of support, got broken and retested right there, and we're heading down. We're coming back up to retest a level. Got that rejection. Now we're heading back down and create the new low. Yep, there it is right there. So we just retested the support, turn resistance. We did 1 test. Now we did 2 tests. That was a 3rd test. We're going to see if we stay below that. And we stay below each time. So that's our confirmation that we're headed down. And where are we headed down to? We're headed down to this level. And this is the thing about structure, is that you're just patiently waiting for price to work. You have the levels, and now you're just waiting for the price to work. So now it comes back up, retests that level of support. It holds for the 1, 2, 3, 4th time it holds, and now it heads back down. It's going to this level. Right, so you know where price is going, and that level was old support that it's headed down to. That got broken, and then it got retested here, and that's where it heads down to.
So Tim, I have a question. Within that kind of range of consolidation, because this is the 4-hour, would you have stayed in that trade that entire time until it finally went down?
Yeah, we actually did stay in that one. This was a trade that was called in our group. And we saw it for different things that we haven't covered yet. But from the simplest standpoint, this resistance level held. And so for us, we stayed in it, even though it kept on hitting it. That trade idea stayed right there and eventually played out. And it's still playing out. And so that's what I'm saying is that this doesn't need me to work it in order for it to fall. If it wants to move sideways, that's fine. But the break and this initial retest was enough for us to get in and put the stop loss just above it. And so what we do is we'll use these position pieces, and we'll say our stop loss is going to be right here. If it comes back here, it'll take us out of the trade if it goes past that. But our target is down to the next level. And so we're in the trade until our take profit is hit. And so that's what happened is the trade played out and we're in it until it's done playing out. And so it just goes, it never hits our stop loss. It just keeps going. Even in that pullback, we allow it to pull back and just keep riding it out because it doesn't need our help. And then eventually it hits the take profit and we're out of the trade. All right, so that's a simple break and retest. And that was back here. You can see how far price came back down to, but you can see that this break and retest here that occurred back here, this break and retest happens again, where we come down to this level and this level acts as support, and then we break that level. When we break that level, what do? We come retest it again. And that becomes a new entry to take it back down. Then we retest it again, and that's the current trade that we're in, where off of this retest, we're catching it down to this level. And then if this one breaks, if price breaks this, we'll do the same thing. We'll get here and let it retest, and we'll enter in right there and catch it down to the next level. All right, so that's just a simple play that we can run over and over and over again.